It's an interesting time. Bitcoin is about to close its weekly chart, and there are a lot of developments here that people are still not paying attention to, which I'm going to be highlighting to you in this YouTube video. So here's the thing, it's just on this weekly time frame, we can get a really nice kind of zoomed out view of what Bitcoin has actually been doing. And you know what? I think it's been pretty good so far. I think now is about the time to start looking at some of these very long-term time frame charts that we were looking at previously. Huge area of support here that we had going back years, and resistance as well, very, very long-term resistance area. This is actually better viewed on the daily time frame. You can see that, just now very, very conclusively, this previous area of resistance, which was the resistance for a long time, has now acted as support twice. The first time producing not particularly crazy gains, only up by 13%, but the second time from the line up to our high, up by 40%. So Bitcoin very clearly backtesting old areas of resistance and finding support there. This is an important thing that I kind of want to form the rest of my analysis around in today's video, because if Bitcoin is able to bounce off such long-term areas of resistance and able to use them as support instead, then okay, I can understand if you're bearish now because we've had a bear market rally and stuff like that. I understand it, and you know what, I kind of am with you guys as well. But at the same time, we've demonstrated some extremely strong bullish traits here, and I don't think it's smart to just completely write it all off and say that we're going to start falling back down to $17,000 yet. We certainly could. I've always told you that I'm open to it. When Bitcoin was all the way down at $17,000, I was talking about how I'm expecting 30K, maybe 40K, and then we could even drop back down to 17K, maybe even set new lows, maybe just kind of, find support forever at 20K. Any of these possibilities being open to me, because I understand that markets can range, right? And these ranges can be really big. This is the other big thing that I want to talk to you guys about, is that Bitcoin, it's still a little bit too early to say otherwise, in my opinion. Bitcoin is still kind of range bound at the moment, and that means kind of between this green line, let me make this red, actually orange is good. No, orange doesn't work. We're going to go for yellow on both of these lines. Between these two yellow lines, Bitcoin is actually range bound, where most of its time is spent between these two lines, but we had a deviation down below, and we very well could be looking at a deviation up above. This is like the only idea that I'm not hearing people talk about, right? I'm either hearing people talk about Bitcoin blasting straight through resistance, but that's not very common right now, or I'm hearing people talk about Bitcoin falling right through all of our support. And, I'm not necessarily sure if we're going to get either of those, or instead something more like, what Bitcoin does very typically, where we kind of deviate above our resistance level and then somehow fall back into a mean. Now, if we do this, that might mean we're stuck here for a very long time, but it would probably also indicate for sure that the market should be bottoming out. Something that I do want to highlight to you is retail traders on Binance, still majority short. We've got 0.94 long positions for every short position, so a little bit more on the short side. Top traders still majority long, and Bybit also still majority long. Fear and Greed Index still sitting at 64. So we are definitely still in an area where it's not ideal for price action if you're bullish, but it's definitely not unideal either, if that's a word. Like, it's definitely not bad either, in my opinion. We're okay, and so range bound is an idea that most people aren't even considering. I think this is great for trading, right? I mean, these ranges are really nice. If we take a look at some of these price levels, we're looking at 18,300 up to 25,000. This is a really nice, predictable 36% support range. Trading range. If we end up dropping below the yellow line, which is what would happen now, then again, to drop down to this low, we're looking at a 25% drop, right? So these are really nice moves to be able to trade. Obviously, having the extra ammunition to trade these on brilliant websites like Bybit is a huge bonus, and if you use my link to Bybit with the description down below, you also get up to $30,000 free that they're giving you to trade with. So you can throw that money into the market, you can do whatever the hell you like with it, and if you make money with it, you can keep it, you can withdraw it, which is a very, very cool offer. So check them out with the link in the description down below. Heading back to the chart here though, if we do end up falling below these support levels, I would have to expect that we could drop significantly significantly lower. You know, the absolute low for me would be 18.3. I really don't see 17 right now. I'll let you guys know if I change my mind, but right now I just don't think we're going back there. Maybe ever, but definitely not now. I just think that we've got such a strong bullish, you know, kind of bit of momentum here. One of the big things I want to talk about on my main Coinbase chart right here is if we look at this resistance level on the 4-hour time frame, we have really just been consolidating up here, and this is one of the key things I said that is exactly what comes before the market massively shoots up. This is an interesting thing to talk about right now because it feels like Bitcoin really should be bearish right now, right? It feels like we've rallied up for a very long time. We haven't really had a pause. If we look at this bottom that we set on the 10th of March and then the high that we set on the 22nd of March, it was pretty much 12 days of straight uptrend. And up until today, it's a little bit further down now. We're about 16 days into this where we haven't really had a pullback, right? The worst we've had was here. That's down by -9%. Okay, that's definitely pretty severe, but it lasts only a day and a half, and then the market starts rallying back up. On this occasion here, we're down by 7% very quickly within one 4-hour candle. Okay, but we do recover it back up. We haven't really had a sustained kind of, we haven't had anything like this where it's slow, where it's deep. We haven't had that, and definitely means that it could be due. But at the same time, if we are just consolidating at resistance, and like I said, it really seems like everybody's expecting it right now. You know, we don't really have a heavy skew on the long-short ratio. I mean, it is still skewed towards, you know, being in favor of the bulls, you know, too many bears, basically. You know, so that's something that could be worth paying attention to, but it is honestly a little bit, like, if you look at a lot of the other technical indicators that you've got, they've all fired off bearish by now. You know, if they, you know, help you catch reversals and so on. If they're just trend following, then obviously they're only going to tell you bullish things, but if they're good for reversals as well, they've all fired off, showing you that this thing is overbought, it's overextended, yet we don't pull back. And that's definitely something which is interesting at this current moment in the market. Now, if we take a look at some of our key Fibonacci levels, along with other support areas, we start to see something very interesting. We've got the support area down here that I've outlined for you guys in the high 26K region, basically 27K. That definitely could continue to act as support. But what we know, if you've been watching this channel for a while now, not even that long, just like literally the most recent video, is that it's quite fair to say is that if Bitcoin falls below the support area, we could be falling down to 24, 25K. These are where the next areas of support are, and this would also work out really well for the market. That also basically means if we go back to this chart that I had, where I drew these yellow lines, if we zoom back out onto the daily, it would mean that we do fall, but we only fall down to this yellow line, perhaps just a little bit below it, and then recover back up. This is probably what I would say right now is the most likely scenario if we pull back. It's hard to say if we will pull back because the market doesn't really make sense right now, but you know, if we did, that's probably what I would say is most likely, simply because there's really good support here on our chart with just horizontal basic, you know, support resistance levels. But then if we take a look at some of our key indicators, we've still got some 4-hour Ichimoku support right at the bottom here. This is a big deal. You know, 4-hour Ichimoku support is really useful. It's very clearly within the 25K range. This is the 25K range right here where my crosshair is. So if the price drops massively right now, it's actually just going to drop into a huge area of support. Daily time frame somewhat similar but further away. So if we take the scenic route down, then okay, we're going to have support there. 1-hour time frame, of course, we've messed that up now. The market has gone sideways for too long, so we can't really use this time frame anymore. If we take a look at the 4-hour EMA ribbon, we have support from it right now. I don't know how much longer this is going to last. The fact that we're staying in it isn't good, right? When we kind of fall into it and then quickly bounce out, that's a strong sign. That's telling us that, okay, we're probably going to be bouncing and we have a good amount of momentum. But if we're, because bear in mind, this is a momentum indicator, but if we're falling into it and then just kind of staying in it, well, that's definitely a clear sign that we're losing momentum. And there's a few other ways we can discern that. We can take a look at the RSI. You know, a lot of people talk about this, the RSI bearish divergence. Now, this is important. The RSI has had a bearish divergence since, like, you know, I mean, it's not horrible, but like since over here we started to develop a bearish divergence. So like it basically started to develop at 24K, you know, and up until, you know, yeah, I mean, it's been going on ever since we hit basically 25,000. No, I'm sorry, what am I talking about? It's been going ever since we crossed $27,000, you know, and you wouldn't really have missed on much upside, but it's clear that this indicator fires off too early and it misfires too often as well. There is a long list of examples I can give you guys for why the RSI is not useful when it comes to looking at divergences. Here's another bearish divergence. Look at this right here. RSI moving down very clearly, price moving up very slightly, and the price just blows up again, right? If you let these divergences take you out of the market, you're gonna be a very bad trader. There's no two ways about it. If and this is the thing about the RSI, and that's why I try and like teach it in a different way, is everyone kind of learns the RSI as one of their first indicators in trading, but that's only because it looks pretty simple, right? Like, it's just one not very offending, not very particularly scary yellow line, so you're not really worried about it. But it's very easy to get this wrong. A lot of the noobs use it, and they use it in the wrong way. And that's why I like to kind of highlight this and, you know, kind of show you how I like to use it instead, which is that, you know, if I've got like 5, 6, 7 different things in my technical analysis arsenal, this will be right at the back. It'll still be one of my tools. It'll still be one of my weapons of choice, so to speak, but very, very situational and only to add to an existing story that I've been developing. You know, I wouldn't let a story be based around this at all because it's just not very reliable. But with that said, we do have that RSI divergence showing us that we could be dropping down at the same time, and this is the thing, is this is at the same time as we're showing weakness on the 4-hour EMA ribbon. So I'm not using the RSI to build my case, but what I am saying is that the case is already here. We've been here for a while, we're due for a pullback. I know that, you know, we've been consolidating a resistance, which in itself is bullish, but we'll put that to the side for a second. I will talk about that in just a minute. But with these factors on screen right now, okay, RSI is not helping. It's probably, in fact, making it worse. So that's something that I'm going to be paying attention to. Daily EMA ribbon, still beautiful support, exactly where we need it. So we pull back, we're in a very, very good place. We stay here, we're in a very, very good place. Let's talk about that for a second. Now, Bitcoin has stayed here for a while, and there's two interpretations you can take to this, right? On the weekly time frame, we've got, because, you know, we have basically closed it now. UTC, we've got 5 hours left on this candle, so I don't think anything's really going to change in the next 5 hours. It might, and this video, for the rest of the video now, 10 minutes onwards, will not be very useful, but I don't think that's going to happen. You know, before we actually get to Bitcoin's weekly chart, let's take a quick peek at the S&P 500. We bounced off support exactly as predicted. We broke out exactly as predicted, then bounced off support exactly as predicted, and we've now had 2 weeks in a row of upside price action. Both weeks have been, you know, with a lot of fierce fighting though. Bears don't really want this to break out. Look at this candle here, big wick. Look at this candle here, even bigger wick. In fact, most of the candle here is a wick, if my eyes are not failing me here. And so, you know, we've got a pretty clear circumstance here where, you know, while the market is really pushing very, very hard, something is stopping it. Like, sellers are interested in offloading. They're probably seeing this as an opportunity to take some profits, to risk, to reduce risk in the market, because it's a very, very risky time. So in light of all of that, if the market is still rising, that's a really strong sign. We had other things recently, but not super recently, with Bitcoin, which shouldn't have been good for Bitcoin, but Bitcoin just kept on rising. We're in one of these situations now where bullish news is very good for Bitcoin, bearish news doesn't really do anything for Bitcoin, and neutral news still results in Bitcoin going up. It's the complete opposite dynamic to what we've been having for a long time, where bullish news did nothing, neutral news sent the market down, and bearish news absolutely fucked the market completely. You know, like dropped a nuke on it. So it's interesting to see how we change. It's also essential, you know, now it's happened, so whatever, we might be a little bit more detached from it, but it's essential also to keep in mind that that transition happened. And if you're able to take note of those transitions, that's where you're going to be making a lot of the money. You know, I, as you know, have been in, you know, a long position for quite a while. Here's a screenshot I took a little bit ago. The numbers aren't too crazy compared to this right now anyway, because we're pretty close to when I took this screenshot, where I'm basically sitting in $180,000 in profit, which I made on Bybit. And the very, very cool thing about Bybit, like I said, are these free offers that they're giving you. I traded this move on OKX as well with a demo account, testing out a bot. check OKX out as well with the link in the description down below. You are getting up to $20,000 in rewards, which is very, very cool indeed. These exchanges are offering you great opportunities to take advantage of what's going on in these markets. And like I said, with Bybit and OKX giving you those deposit bonuses and rewards respectively, you're getting huge bits of value just to use an extremely robust exchange, in both cases that have been around for a while. So check them both out if you're interested. But like I said here, weekly candle, still moving up. We did have that transition. If you were able to pay attention to it, you would have been seeing some really nice gains. Fortunately, I was able to take advantage of it. I don't take advantage of every opportunity I see. Some aren't good enough for me. Some I just miss out of negligence, because I'm human too. But sometimes it goes like this as well. So this is obviously where it's quite fun. I want to be clear, those of you that are in VIP, that are watching me trade in real time and all of that good stuff, you will know this already. I do not aim for gains like this. If I can get them, and I can see that I can get them, like in this particular circumstance, then okay, I'm not going to let it go. Obviously, I'm going to go and get that back. I'm obviously going to go and get that money. But I'm not aiming for it. I'm aiming for much smaller, easily reproducible 20%, 30% profits, because those are what you can compound, right? The guy that's always chasing for this screenshot is going to lose way more money than he's ever going to make when he hits it good with a profit like this, right? Because you might actually do it eventually, right? Like, you might actually make money eventually, right? Like, you just kind of have to keep throwing shots and eventually it'll work. But you would have lost so much money before that happened that it wouldn't have been worth the time. So these are not worth aiming for, in my opinion. They don't come super often. They're to be fair, they're very abundant right now, so it's quite easy to pull these kind of gains in this current market. But generally they don't come super often. What will actually make you way more money is, compounding your gains. I've given you guys this example many times, but if we take 1.3 times the starting balance of $10,000, in itself it's nothing crazy, but if you're able to pull off, say, 5 of them in a row, then we're looking at $37,000. So just 30% profits, you've nearly quadrupled your money. The math doesn't really even make sense, but that's the power of compounding, and that's why it's so important. So that's something that I would definitely urge you guys to consider. Gold as well on the weekly time frame here, has shot up and then paused, basically formed somewhat of a reversal or a pause. That's important to look at. And the dollar just doesn't look great. The dollar is looking like it could continue to drop. Yes, it could have some relief here, but it's definitely not in a strong position. If anything, it's in a neutral position, I would say, and I'm being generous there. I do not think the dollar is in a good position. So if we bring all of this back to Bitcoin now and take a look at what this means for Bitcoin, well, we've seen a really strong rally here and then the market having to pause, right? And if we look at this from this candle low up to this high right here, we went up by 43%. This candle here up to this high, we went up by 30%, but if we include the week prior, we're up by 46%. So these are pretty similar rallies. This rally right here, if we include this wick, and this rally right here, very similar. And what we had after the first one was basically a very long area of consolidation, which lasted, I don't know, what is this, like 7 weeks? 7 weeks, because this is 6 weeks, but no, this is 7. It's more like 8 weeks. 7 to 8. A long time. Basically, a long time. What am I talking about? Hang on. Let me get my dates right. 42 days is a month and a half. That's like 6-7 weeks. And so we spent quite a long time basically correcting for that. And I think that might make more sense as well to happen now. The only issue with a correction is that we're not really at, like, we haven't quite hit deep into the resistance area. Like, for me, on my chart, the resistance area started where we found resistance. Okay, no surprise there. This red line I've had for a very long time is resistance. Whatever, we knew that. But a lot of the resistance is, when you cross the 30K area, 30K up to 33 as well, a lot of resistance here. I don't think we've quite hit it yet. On this occasion here, we had a very strong reason to get rejected because we found some problems in this range before. You can't really tell on the weekly time frame, but it was there. We don't really have that yet. We still have a little bit more upside to go, and I think that we've got a good chance at getting it. It is, for me, it's just the fact that, okay, look, I don't like seeing the fear and greed indexes this high, but long and short ratio, we're not getting an abundance of people going long right now. A lot of people, good traders, are expecting the market to drop, and we just haven't. we just haven't dropped, right? Like, the bears are not getting the relief that they want right now. And I want to remind you, right, like, I'm making this video on a Sunday. You know, depending on which time zone you are in the world, it might be Monday already, but, you know, I mean, there is a banking crisis going on in the United States, and on this weekend, you know, there are conversations happening behind closed doors with meetings that haven't been scheduled. You might have seen this in the news. You know, looking to potentially save what's going on. You know, it feels like the general public, if you haven't been paying attention to this, you wouldn't even know there's a crisis going on, but there is. And if it keeps getting worse, right? If this is, at this stage you don't know about it because it's not that bad, but at this stage everyone's going to know about it. We might be crossing that gap right now. I'm not here to spread fear or anything like that. That's not my game. That's not what I do. I'm probably the least worried about it because I'm in Bitcoin anyway. But if that's what we're going to see and things will be getting worse, well, so far this narrative where things have been pretty bad has really served Bitcoin. And I don't know if it's reasonable to expect that if this continues to get worse, would Bitcoin suddenly stop responding to the stimuli that it's already responded to so well? Or is it more likely to say that if this keeps getting worse, and the same thing that's basically already helped Bitcoin so much happens again, even more intensely perhaps, is it fair to say then that Bitcoin might keep doing what it was already doing in response to the same stimuli? In other words, is it safe to say that if banks keep collapsing, Bitcoin keeps going up? I think that's a fair conclusion to make, you know, and I think that's where we could be at. So it's a Monday tomorrow. We're going to see how this looks. You know, fortunately, we haven't left the CME gap or anything like that. Not that it matters. Opportunities in the altcoin market are still interesting, but that opportunity still hasn't opened up. Bitcoin's dominance remains high. Where it's pulling back, it's then climbing back up again. The top of its range on this chart is very close. It should be topping out around 48.25% if we're going to stick to this. We don't have to. We could be looking at rising much higher. I don't think that's going to happen. I think altcoins are going to get a lot of shine very, very soon. So I'm looking to position myself in coins like Ethereum against Bitcoin because this has dropped by quite a bit. Other altcoins that I'm looking at against Bitcoin have continued to drop as well, which for me just spells even more opportunities. It's hard to find a chart against Bitcoin where a coin has not been performing poorly. You know, most of these coins have been getting pretty badly beaten up against Bitcoin lately, and that is amazing for traders like myself because I wasn't able to experience those losses because I wasn't in those coins, but I certainly intend on getting in as these prices are getting more attractive. So I'll keep you guys up to date on that inside of 𝐷𝗫𝐹ly VIP if you want to join, follow these steps on screen, and there is still that 50% discount running as well. One final time, guys, if you want to get that free cash that you can trade with, if you want to make trades on the very same exchange that I've been using to make these beautiful profits, Bybit is the place to be. Check them out with the link in the description down below. Really hope you've enjoyed this one. If you have, you know exactly what to do. Hit up the likes, subscribe, click the bell, and I'll see you all in the next one. Cheers.